Okay. So once you go to the daily, you want to go to the daily chart. Check directional bias. Okay. You always want to squeeze in so you can see overall what the overall move is. So based on the daily, we are definitely in a bullish move, a bullish trend, right? So once price gets, so once you go to the daily, you just want to mark up your levels of support and resistance. Again, don't try to force it. If you see it, you see it. If you don't, then don't try to force it. And really, you don't have to put all these lines here. You can just put what's above and below current price. So you have your zone here. And again, I'm going to show y'all how to do it without putting all the lines on your chart, but just for now, it was just an exercise so you can just train your eyes to see where price may react. So this zone here, that there. So above, and then I'll just put one more below. Like I said, I don't like to force it. It's probably another one in between. This is probably more of a swing trade, but that's neither here nor there. Okay. So, and remember we saved templates, so you can just go and mark up your zones. And then you want to go down to the 4 hour and do the same thing. The 4 hour zones are more for intraday trades. So I'm just going to mark below and then mark, and it's already mark above. So because we did this already, this one is already marked up. Any questions so far? Anybody got any questions?
I have a quick question. Do you have any tips for ensuring that you don't end up putting just a bunch of lines on your chart, like something that kind of would validate it versus overthinking it and putting too many lines?
Yeah, the only thing I can think of is like I just said, just don't force. For instance, let me see, because I've marked this one up already. Okay, let's go to this one. And I'm going to show you how to do it without the lines as well. Like I said, I'm just trying to get everyone's so for instance, like I just take my cursor wherever I have multiple touches or get multiple touches, I just put it there. But for like prices here, so I just take my cursor, come down, look for the closest zone that's below price, the closest zone above price. So for instance, right here, price here, 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 here. And then you can just have those two lines if you want, because now price is in the middle, right? and we do not want to trade in the middle. So that's on the daily. So we'll go down to the 4-hour. So the closest zone below price. And of course, if the daily and the 4-hour lines up, then you don't have to add those lines. So I probably would not put anything in, maybe here, the 4-hour. And then that would be it.
You have a good eye. You have a good eye, right? Because there's a lot of them. So when you start finding out why you put them there, you're going to start putting them there on different time frames, and now all of a sudden you got a messy chart. I'm trying to get out of that myself. You just want the medium, the top and the bottom, and you'll always be able to find it. And it's great when it touches your area. Like, you set it there and then you put an alert on it, and when it hits, it's like it's just time to go to work.
Yes. So yeah, so that's, you just, and that again, that was the purpose of the exercise, okay? Just so you can train your eye to see where, like, here's a zone here. Here, and then and like I said, if you don't see it, don't force it. Like here, like these tops here, and then there's a level here. So maybe I'll put one here. And then that's it. Okay. So, and then once price, and then you go down to the 1-hour. And as you can see, price is located right here at a key level. And I didn't mark this up, so I don't know if it's the daily or the 4-hour. The only difference is between the different time frames. Of course, if you're at a daily, you're probably there's going to be probably a bigger reaction from the daily, but also from the daily, the weekly, the monthly, whichever, if you're a swing trader, you'll be using the higher time frames. And if you're the intraday trader, you'll be using the daily, the 4-hour, the 1-hour. So once you're on the 1-hour, also on the higher time frames, price may consolidate a little longer on the higher time frames. Just FYI. But here you had price to go through. So if you're on the 1-hour and you're waiting for price to give you what you want it to give, right? So this pushed down, pushed through the zone, and then gave you a bullish order block. It came back and gave a bearish order block. Now, you can either wait for price to break either above this zone, and I'm going to give y'all a tip on what I'm going to give you. This is how I mark my charts up without the lines, right? So if I'm marking up my chart for the day, I'm going to my 4-hour, and then I'm looking for my high and my low. Okay. Or I'm looking for my key levels, and I just mark up my zone. So I either mark this up, and I'm just going to go to a clean chart. So go to the daily. I see I'm bullish, right? for now. Of course, we had a pullback, right? So now I go to my 4 hour and I look for my high and my low, whether it can be a swing high, swing low, or high or low. So, and does everybody know the difference, right? And then I'm just gonna put a little zone here. Does everybody know the difference between a high, a low, a swing high, and a swing low?
Yes.
I don't.
Yes.
Not really.
Okay. So, based on market structure, so we have a push up, a pullback. We have this push up, and then we have this pullback. And then we have this push up, and then we have this pullback, right? So before this got violated, or before this was a break of structure here, before this was a break of structure, right? So before this happened, let's go here. So price pushed up. This was the low. This was the high. Well, this would have been the swing low after it broke this structure, after it broke this high, right? So this would have been the swing low. Okay. This would have been the break of, once this broke structure, this would have been the break of structure. Once this breaks structure, this becomes the swing low. Okay. So until this high gets broken, this is just a low. This is the higher low. Okay. And the reason why it's just well, let's just say a low. A higher low. We're going to go with the higher low. Okay. So once, the reason why it's just the higher low, because price could then start breaking structure back down to the downside and start creating lower lows and lower highs. But once price breaks the structure, everything below this zone, and I'm going to mark up this here because we can see it, although I forgot I'm on replay. Everything below this zone. So we're not talking about this zone. We're not talking about this. This is a low. This is a low, but this is the swing low. So everything below this line makes the swing low. So if you ever want to, and why you want to make sure you distinguish between the low and the swing low, because when you're marking up like your fib or trying to identify how far price can come back to. So once this breaks, right, price can come all the way back down here. Price can break this low, price can break this low, and then come back and push to the top side. So if price came and broke this low, pull back, broke this low, pull back, price can then come here because this is the swing low and then push all the way to the top. So whenever you get a break of structure, you have to remember this is a minor or internal break of structure. Am I making sense to everybody?
That makes sense. So until it breaks through that swing low, it'll be a bullish market.
So yeah, so it will still be bullish. So because here we have because let's see. So price was bearish, like when you squeeze in, because that's part of the plan to squeeze in, right? Price was bearish. And then price started making, so again, here we go. This was the break of structure, right? So that made that the swing high. This last move right here was the swing high, not this one. And I'm going to go down in time frame to even give you, to make a little more noise. So we had a push down, a pull up, a push down. Let's go to the 15 minute. Okay, so we had a push up, right? It broke structure, pulled back, push up. So you have all these internal swings, right? But this is because price is pushing up, this whole move is part of the swing. But once price starts breaking these internal lows, the low here, the low here, the low here, the low here. And it really all depends on like what type of trader you are, whether you're a swing trader, intraday trader, scalper, right? So an internal break of structure. So I look for the last break. Now, everybody knows that I like to, my break of structure, I like to see a candle close. And why I say that is, let me see if I can find an example. For instance, here's one right here. So price broke structure, or the wick past this high, right? But because it did not close candle for me, I would need to see a closed candle if I thought this was going to keep going to the top side. But price wick past and then came and gave a bearish order block, but it did not break the internal minor structure until right here. Okay, so once I got that closed candle below this zone, because this was a push up, a pullback, a push up, price never broke, closed above here. So I'm just being patient, waiting for a price to show me what it wants to do. So once it violated this order block, then I'm going to, and this is where the key levels come into. Once it violates your order,
Before you move on, can you
Yep.
show me the order block that was violated? Point it out to me.
Right here. See this? It was a bullish order block. So what do we expect when we get a bullish order block? We expect price to come to that zone, right? We're expecting price to come to that zone. Now, because it did, one, I know I'm bearish. I know the overall move on the higher time frame is bearish, right? So price gave me a bearish order block here, a strong one at that. It pulled into this order block, did not close above it. I'm looking for a closed candle. And then price came and violated this order block. So that is a here it's a change of character, right? Because
Okay,
price was
I can see
pushing
it.
up, and then it started bringing pushing back down to the downside, and violated this order block. So it tapped into this order block, pull back, and this is where the level of support and resistance comes in. Can you see where my cursor is?
Yes.
You see, like, price tapped here, price tapped here, price tapped here. So price tapped into that zone. So I would just take I would say a zone here, and I would even mark up this zone here. Hold on, look at my cursor. Because this is the high. Oops. So this is on here. And as you can see, if you just bring it over, it's the level of resistance. Okay. So once price breaks structure, especially in the bearish market, I'm looking for it to come back to a level of support or a level of resistance. So if price had pushed all the way back up here, then that's what I would be waiting on. But because I've already marked this up prior, when I got on my chart, I marked up my zones, and then price came, and this is on the 15-minute chart, right? So this is pretty much for a quick move for the day. So you have your high here, you had a minor level of support and resistance here. So if I move this over, you'll see it was support here, resistance here, support here. And now price broke structure, pulled back to this zone, and gave a bearish order block.
Okay, I just want to make sure I understand what a violated order block is. It because price pushed through that bullish order block and then closed below it?
Yes.
Okay.
Yep, that's exactly what it is. Again,
Gotcha.
'cause once it pushed up, you would expect it to pull back into this order block and then push up some more. But
Right.
it didn't. It actually closed. It actually closed below. So now it is a chalk, a change of character. Okay. So price pulled back here and gave a bearish order block. So you want price to show you exactly what it's going to do. So now that you have this order block, you could get in on, let me change you can mark up your order block, and let me change, okay. Or let me just put a sell zone. Okay. So you can mark up your order block. Now price can tap into it right here. You see that it tapped into it right here, but it also came back. So you would have been in drawdown if you had set your zone from here to above. Now that's 5 pips. We're on the 15 minutes, so I'm expecting the pips to be a little smaller, but you can always do 10 pips just to clear this zone here. Since price gave you your bearish order block in your zone, you'll wait for price to pull back and then you can, and I'm just gonna mark up my next level of support and resistance right here. And then you can just take your zone here. Again, we're on the 15 minutes, so you're not gonna get a lot of pips, right? But of course, if we're on a higher time frame, the zones would be a little different. So I'm going to erase this chart because we're going to do this exercise. I forgot I was all the way over here. So we're going to go to the 4 hour. And I'm just going to go somewhere in here. So say price was pushing up, right? And then I mark up my zone here once price starts. And then, so price is pushing up. I marked up my zone. And then, so you have this order block right here, right? So I'm going to mark up that zone there. So we're just pretending like this is where we are on the chart. So you got on Sunday came, we'll go to the daily because that's what the trading plan is saying. Let's go. So our trading plan is saying we go to our daily. You can mark up your zones. You can use a line, or you can use, let's say we got on the chart and price was here, right? So you got a zone here. You have a zone. I'm just going to use this order block. Okay. So I'm just going to use this zone here. So we got on the chart. We have our daily, this is our high, this is where price, we're looking at market structure. Okay. So you hopped on the chart and this is the last swing. This was the last swing move, right? So you mark up your high of that swing. You can mark up your low of that swing. This is, if you don't want to put a ton of lines on your chart, this is how you can do it. And then go to your 4 hour. And now you can go in and mark up your 4 hour key level. Okay. And then that's all you have to do. You don't have to have a ton. You can have 3 zones on your chart. So we were right here, right? And you can clean them up as you go. So price, we're right here. We logged on our chart. Price is right here. Price came into the zone. You see it's no bullish momentum, right? So we have a level of support and resistance right here. So once we drew our zone, we came here and price gave a bearish order block. Now it's still in your zone, so price could easily come and push up to the top. But price broke through, pulled back, gave a bearish order block, another bearish order block. So I would be marking up this zone here, right? So, and then that's 39 pips. Now, I personally am a 20 pip. But if you want, oh, I'm sorry. That's why it's so many pips, because I'm on the 4 hour. So let's go back down to our 1 hour. Per our trading plan. Okay, here we go. Okay. So price is here. So price is here. It gave a bearish order block. And then price came back in your zone. And I'm just going to draw. You have a bearish order block here. Again, I like to see the bearish order block come out of the zone, which would be this order block here. There we go. And then mark up that zone and put my stop loss above this little minor swing. So that's 35 pips, but it's above the little minor swing. Okay. So my next zone would be here. So price pulled back into the zone. Now, this probably would have wicked us out, closed us out, but if it did, and I'm sure this was some kind of news, it was at 8 o'clock on a Tuesday. Once this news occurrence happened, and then gave you another bearish order block, this little minor bearish order block, you could have gotten back in the trade. You could have gotten back in the trade. So that one would have gotten stopped out. This one would have been, and then you could just put it above that high. Once this order block happened, it came back in and then took you to the next zone. Now, this one didn't go all the way down, but if you look to the left, you have some 1 hour key levels that you could have used. And I'm just going to use the line so I don't have to draw. So you have a 1 hour level here. And I'm sure on the 4 hour, it's probably a form of some kind of support and resistance. And then you had a zone here. So you definitely could have taken it from here. And what we already know about price action, we know that this was a order block here. So you could have taken it to that zone as well. So you have to put all your plays together, right? You have a level of support and resistance. We had an impulse move right here with an order block. There was some imbalance right here, but you could have taken your profit to this order block here. That was 213 pips. And that's what happened. It came to that order block. So we didn't talk about this part last week, but you have to remember to incorporate what we already know. And if anybody in here doesn't know that, just let me know and I will definitely explain it to you.
Can you please explain?
Yes, ma'am.
You.
So anytime you have this impulse move, so price was going up, it was meandering up, and then there was an impulse move to the downside, right? Let me go to the higher time frame. Okay, so we had meander up, and then we had push to the downside. And as you can see, that push to the downside came into an order block, but then it violated the order block, right? So we had this push up. However, what do you see? This violated order block was not the swing low. So we have this break of structure here. So that means everything above this, below this line until you get to a swing is the swing low. So although it violated this order block, it did not break the swing low. And we're just going to mark it. Swing low. Okay. So you got to push up, push down. And then once price broke, this impulse move broke structure, which made everything below that until the last swing, this swing low. You can even make this your swing low. And the swing low is pretty much where you would put your stop loss, right? So you had this. If you have been here long enough to see Todd say this is the swing low, this would be your swing low here. Now you have yeah, that's the swing low. And everything below, again, everything below this break of structure line till you get to the swing is the swing low. So there we go. Does that make sense to everybody?
Yes, that makes a lot of sense. Thank
Okay.
you.
You're welcome. So price, although it violated this order block, it never broke the swing low, right? So now you get another impulse move. So now you have the next break of structure, which is here, right? So this was the push up, and then this started pulling back, pulling back, pulling back. And then you had a impulse move that broke this high. So now everything below this line here to the last low is now the swing low. So you have this swing, this is the next, I'll just move it up. So this is now your next swing low. Okay. So price is pushing up, pushing up, pushing up, pushing up. And yeah, you have these internal moves in between that you see how choppy that is, right? And then the next high would be here. And then you move your swing low here. Okay. So now if you get a break of this high, actually this was the break, this was everything between here was the swing low. So I don't even, this is a high, but not a swing high. So now anything that comes back to, like we said, this was a level of support and resistance. I don't see, well, there is an order block right here. You see it? That 4-hour order block right here. So this is what,
Yes.
this is how you want to see it. You want to see it. You want to see this order block, and then you want to see price come back into the order block and then move in the direction of the order block. So this bullish order block should make price move up. But once it gets violated, right? Once it gets violated, then there may be a change in price. Like this one got violated, but remember, this one is in the middle. This one's in the middle here, right? So everything below here to the last swing low or to this last order block this is the low. Anything in between can get violated without changing the direction of price. If that makes sense. That's what I wanted to say. Anything in between the zone from here to here can get violated without changing the direction of price. So when you mark up your levels of support and resistance so technically you have another level of support and resistance here. You have another level of support and resistance here. So anytime price comes in between these zones, levels of support and resistance pretty much is your market structure telling you that price is either going to break through, pull back to that zone and continue to the upside, or break through, come back to that zone and continue to the downside. So with that question, you asked me about the order block, about price coming back down to, like, this was a level of support, but you also had on the, was it on the 1 hour? I think it was a 1 hour order block. Because that's where we would be looking for price, right? So you had an order block here. So you can mark up your order block here. And then you have just a little minor imbalance down here. But if price is going to respect the order block, and just remember, we're not taking price from here. We're not putting in like a limit or anything from here. We're actually just setting a TP or watching what price does once it gets to that zone. So once price got here, you're watching to see what price is going to do, right? That was an order block. So you are already in this cell. So once price got to that order block, you're watching to see what price is going to do. Price is either going to, you see it stopped here, it pushed up. I would not say it broke structure, because for me, I'm looking for a closed candle, right? So I'm looking for a closed candle below this zone. Price came in, didn't close candle below. So my guess is it's probably not going down any further at the moment. Okay. So for an example, price got here to this key level and it broke structure. It closed, there was a closed candle below. So now I'm thinking, okay, price is still selling because price is closing levels of structure. So once it closed below, got to this order block that I would have marked up anyway, then I'm watching to see what price is going to do. So price pulled up, it's not breaking this little minor high right here. And then it came down and it's not breaking this minor low down here. It's not closed candle. So what did price do? Price came and broke this little minor level of high right here. So once we see the break of structure or a key level, and I say it's a key level because price wicked, came back, and then broke above. Okay, so now this is a key level, a 1 hour key level. I want to make that clear. That's a 1 hour key level. So price came and pulled back into the order block. So you can either, if you see that, you can now put your entry at the order block, or you can just put it at the zone. That's the key level, right? But you have to make sure you're giving it enough room, which means this zone right here, you want to put your stop loss below this zone. So now I'm not a one to one, but I would have looked for the next key level. And you want at least a you want at least a 1 to 3 trade, right? So this I would have just taken it up to, this is a 1 to 2. You could have traded that. 62 pips is good. At a standard lot, that's 620. That's $620. So you could have taken it there. Once price got there, I personally like to take my money. Okay. I like to take my money out. If you want to wait, you can do that. But as you can see, price came there, pulled back to the key level that we marked up. I don't know if it's a 4 hour or daily, that we already marked up, and gave you a bullish order block. So once it gave you that bullish order block, this could have been another, you marked it up from here to here, got your bullish order block. Now, you wouldn't have caught it immediately. It would have pushed up, pulled back, and then you could have taken it at least to your highs, right? Because now price is breaking structure, pulling back. If you use the fib, which I will get into probably next week, this was the initial break of structure. So you could have just fibbed, if you wanted to just fib the move from here to here. You see price pulled back to the 50%, the order block, and then you could have taken that to the -61. Again, that's all good, but I would have been looking to take it to a level of support and resistance. And it went there and then pulled back. Again, I'm taking my money. That was 62 pips. And then I'm waiting on the next move. So if price had given me from this level of support and resistance, if price had came and given me a bullish order block on this zone right here, my next move would have been from here, and I would have put it below wherever that order block was formed, the bullish order block, and then I would have taken it to the next level of support and resistance, which was, for me, would be right here. Okay, so then the next move, let me delete this, would have been from, oh, sorry, that wasn't it. If the order block would have been from here, then the next move would have been from here to here, right? That would have been 69 pips. Again, a standard lot, $690. Okay. It did not give me an order block from there. It pulled back to my key level and then gave me the order block. So again, you wouldn't have gotten it immediately, but price pulled back. And like I said, you can target this high or even the next zone. But I would have targeted the highs, and as you see, the next zone would have been you would have missed it, but you could have gotten it here. Okay. Once price got up here, say it didn't go up here, right? And say you didn't take your money here at the last high. You could have, because this is a level of support and resistance. Just remember that. So it was a zone where price came, reacted, it pushed up and reacted. So it is a level of resistance that occurred. So you can take it back to there. I would have tried to take it up to here, but once price got here and started not breaking these highs, didn't break this high, right? Or it did break this high. It broke that high, but then it pulled back, didn't break a high. On a lower time frame, there probably would have been a little order block here somewhere. But it pulled back into your zone and gave you a bearish order block. So that's probably where I would have taken my money if I didn't get out right here. If I was waiting for it to come here and I saw this zone come here, pull back, gave me a bearish order block, pushed back up into the zone a little bit, gave another, that's a tied order block right here, right? I probably would have gotten out somewhere up in here. I would have took my money because now I'm seeing that price is not trying to push up any further. And had I seen it break here, break this zone here, and I didn't get my money then I know the pullback, this would have broke structure. I know I would have taken my money, right? Because there's now another level of support, a minor level of support and resistance, right? Once it broke, it pulled back to the level of support and resistance. That's where I would have took, if I didn't take it here, didn't come take me out here, I would have taken my money right here. Because now it's starting to create, you have a lower high and now even a lower high. So I'm taking my money. But what I'm not going to do is wait for it to come back down here. Oh, you're welcome, Terry. You're welcome, you're welcome, you're welcome. So, any questions on that? I know I threw a lot in there today. Any questions on anything I threw in there today?
Not for me, but you are really helping already.
Well, I'm so happy to hear that.
This is amazing.
So yeah, so again, so one, did everybody open up that Rocket 21 challenge?
No,
I
not
did.
Okay, so with that particular challenge, and I saw it I don't know where I saw that challenge at, but with that particular challenge, if you make 20%, if you're one of the top traders, let me see if I can bring it up. If you're one of the top traders, they will give you a prop challenge to actually trade. So you don't have to pay for the challenge. Oh, that's okay, Alicia. So the challenge started today. It was a December challenge. So it started today. No one should have traded in that challenge yet. So on Monday, hold on, where did I find?
I know, but most firms, like, it has to be like the day before. Like, once it starts, they don't allow you to. And I don't know if this one is different. I haven't checked.
Let me see. I'm trying to find it now. I'm trying to find the link. Let's see. See if I can. Hold on. Let's see. If this will open. So it's not taking me to the actual challenge. Hold on. Okay, here we go. Let me share my screen for this. New share. Okay, so start. No, this is not it either, because this is the one that actually costs money. Competitions. Hold on, here we go. Here we go. Here we go. Here we go. December, because I'm already registered, it won't let me do it. Alicia, so I would see if it'll allow you to do it. If not, I would say get an FTMO challenge, a free trial. You know that they allow you the free trial for 2 weeks. And then you can trade that one. So this one has 30 days still remaining. So yeah, I would try and see if it'll allow you to join. Again, if not, then you can hop on the FTMO. So the purpose of the plan is to go back to trading view. So the plan is to use the challenge or the competition to only put in the trades that we use with this particular strategy. And if you happen to win a challenge or win a prop account, then that would just be a bonus. So I will be calling out, or I would like to see if anybody else wants to call out any, trade ideas for the competition. And then we can all look at it together and put in the trades together, if everybody's good with that. I think I'm still on the replay. Hold on. Yeah. And with this particular competition, it is on MT5. So I actually put it on my iPad, so it won't let you join. Okay, so FTMO. So if you didn't get the competition, if you weren't able to join the competition through Rocket 21, you can join the you can sign up for the FTMO free trial. Again, that's 2 weeks. And really the purpose is to you know, trade this particular way. And I don't even know if Rocket 21 gives you all the information that all the data that FTMO, and that's why I say FTMO, because FTMO provides a lot of data analysis on your trading, because you will be showing your data as part of the beginner's trading session. Okay. So let me hold on. I know I wrote some notes down. I want to make sure I covered everything for today. So I said I was going to start this week as week 1 to go over market structure a little more. If anybody needs additional or wants additional information on market structure, you can speak now. Speak now, speak now.
I would. I'm sorry, I'm
Okay.
like really new.
No. So, okay, what's your name? Who is that?
My name is Destiny.
Hi, Destiny.
Hi.
So what do you know about forex? Like, how long have you been trading?
I've been trading on and off for 2 years. I did come from Ruby's group.
You came
So
from Ruby? Okay.
yes. But I really haven't been trading like almost at all. Just like basic market structure and price action.
Okay.
And
So when you look at like where price is right here, like this chart right here, what do you see? Like, what is it that you, when you, let me go to the 4-hour. So it's not so much noise. Do you see the breaks of structure, the swing lows, the swing highs? Like, you understand that part? Like,
yes.
okay, good. You're halfway there. You are halfway there. So we had an impulse move. You had this break of structure. And this would have been the swing low of that move, right? So usually when you have a break of structure, it's always an impulse move, right? Hold on just a second. Okay, so usually when you have that impulse move, whether it's here, whether it's here, whether it's here, you tend to have there's a minor break of impulse move here. It didn't break this swing high right here, but there was an impulse move, right? So usually where there's the impulse move is where you start looking for your break of structure. And usually where there's that impulse move and that break of structure is where you would just roll back and look for the swing low. So this was the last swing low or part of the move that broke this structure. So this was part of the move that broke structure. So all of that is your swing low. That's not your swing low. That's not your swing low. This would be your swing low. So then once you get a pullback and then you get another impulse move, you have that break of structure. So now everything below that zone that forced this particular move, and when I say forced, like there was a as Todd will put it, meandering before the push up. So now this is your swing low. So anything can happen between here and here without breaking structure. You're still looking for a buy because price is bullish. Once it breaks, once you get a break, you're looking for a pullback. Again, I'm going to go over the fib next week. So this pullback to the -23. And once I get into fib, I'm going to explain if it pulls back to pull back to the 23.6. And what I know about the fib, what I've learned, what I've studied, and when it pulls back to the 23.6 and the 38.2, price 9 times out of 10 is going to the -61.8. If it pulls back to the 50%, 618, 78.6, 88, like it can pull back to any of those fib zones, right? Hold on, let me put that right there. It can pull back to any of those fib zones without breaking. You see there's an order block at the 88. There's an order block at the 78. So it can pull back to any of these zones without breaking structure because it did not break the swing low. Let's see. So Terry, what is your markup? I like that markup, but what is your markup? What is your analysis of that markup?
So I'm looking for it to sell to that zone at the bottom.
Correct. So I'm gonna share your screen because I like that. I like this markup.
Oh, don't do that because I'm on my phone. I ain't that good with
No.
sharing.
I'm pulling it up from what you sent in the chart in the chat. So as you can see right here, price broke through this level of structure or key level. So if you dragged it over, it will probably be a strong level of support and resistance. It gave a bearish order block. And this is on the daily, so this is an even stronger move, right? It gave a bearish order block, pulled back into the zone, and his target would be to this next zone. I don't know how many pips that would be. What's this? UCAD on the this is UCAD on the daily. Hold on, I'm gonna go to it. So UCAD. Was it UCAD? Wait a minute, did I do that right?
Like 134. I just measured it.
134 pips on the daily. So you have the zone here. And now the next zone, you can mark up this. You see right here, it's level of support resistance here. You can see it right here. Level of support and resistance here. Well, I'm sorry, that's where he is now. Wait a minute, am I marking the right one? I feel like I'm marking the wrong chart. Hold on.
That's it.
No, that's it.
Oh, that is it. Okay. Oh, okay, I see what you did. I got you. Gotcha. So he marked up the he marked up the bottom of the wicks, which you can do because this whole zone is, but from here to here, he marked it up down here. 100 plus pips. If you can get 100 pips out the move, I say take it. Take it, take it, take it. So yes, so from one zone to this zone, from one zone to the next zone, 100 pips. Even if you see here, push down, came to a minor, like an internal zone, price came and so price came, gave a bullish order block, right? Of course, he's not going to trade it from this zone here, but oops. But this would have been the zone right here, right? Because that was a level of resistance. Price pulled up above that zone, gave a bullish order block. Now, of course, he would have been down on a smaller time frame, 4 hour, 1 hour. There's a 4 hour order. Which one was it? Was it this one? I can't remember. Either it was this one. It was this one right here. Gave a bullish order block from that zone. You mark up your bullish order block, and then mark up your bullish order block, and then take it to the next zone. You can take it to this zone. Okay. You could have taken it to this zone. That would have been 89 pips. If I went back to let's just say this is a level of, and I'm just going right here. I'm just looking over here to the left where there's a level of support or resistance and drawing it over, or he could have taken it up to this zone. Okay, that was 124 pips. And I say, whenever you get to a zone, if you want, this is on the 4 hour, price came up here, gave a 4 hour bullish candle, gave another 4 hours bullish candle. So you could have stayed in the trade. I like to watch mine from the 1 hour. If I had gotten a 1 hour bearish order block at this zone, I would have tapped out. But if I had gotten a 1 hour candle, another 1 hour, maybe a 1 hour order block, then I would have stayed in the trade to the next zone. And then this gave, see where it gave a bearish order block here? Once it pulled back, I would have gotten out. Because I don't know if it's going to go down here or keep going down here. Although it came back and broke above, now I'm waiting for an order block, which happened right here in the zone. So now I would have taken the buy. I would have covered my order block, and then I would have looked to the left to see where my next zone was. So you have this high here. And then, and I'm just going to go to this zone here. So this order, I would have taken this order block to either here, what was 34 pips, or I would have taken it to this zone here, which is 66 pips. And as you see, luckily, because, and we already know that once you get it, once a high is swept, right? You see that sweep right here, it's likely going to start going in the opposite direction. So I would have got my money, I would have been out, and then I would have been waiting for the next move. And then at this zone, because this is a high, it is a key level because it is a level of resistance. So you could have marked up. We're just going to pretend like I can see what's going on over there. You would have marked up that zone from way over there. And price gave you a bullish order block. And then it came and gave you a bearish order block. So, and because we know it swept this high, this line right here was a high, because I just put it at the top of that wick and gave a bearish order block. So then I would have said, okay, so maybe we're selling. I got an order block in my zone, got a bearish order block. I personally like to mark up the wicks because I need to be able to, and here we go, 20 pips, and we're on a 4-hour chart. I want my 20 pip stop loss, and then I want to take it to the next zone. That's 58 pips. Again, standard lot, $580. If price gets here, because there's an order block, it might pull back and then start dropping, or it might come here and start buying up some more. So that's why you have to wait for price to show you what it wants to do once it gets to your zone. Okay, so once price gets back here, and then now we have a real strong 4-hour order block. And I'm guessing that price is probably going to just pull here and then, oops, pull here and then sell down to here. That's 40 pips. That's 400 bucks. Okay. So, and then once price gets here, you're going to wait for price to show you what it wants to do. It's either going to give you a bearish order block in this zone and start breaking structure. And so you'll wait for a pullback to sell it to the next zone. And this would be my zone right here. Yeah. So that's pretty much the strategy that I use. Any questions? So the plan for next week is we're going to trade the competition, or if you're doing the FTMO challenge, free trial. Oh, Leisha, if you didn't, since you can't get into the December challenge, there was a January one. So sign up for that one. Now, I did want to talk about one last thing on market structure. Y'all are here for it. Okay. Y'all are here for it. Again, on the higher time frame, market structure is, as you see, this is the high, this is the swing low, right? So the higher time frame, if you want to do swing trading, you would just do the same thing on the higher time frame. So current price, this is your current level of resistance. This is your current level of support. And then there's another little one in between. Okay. So in between. So if you want to trade, if you want to be a swing trader, we're talking about 674 pips between this zone and this zone. As you see, it gave a bearish order block. It did not break this high, right? And so you're probably going to get a pullback somewhere up in this zone, somewhere up in this order block, to then sell it down to the next. And you see there's an order block right here. So you can sell it down to this next zone. Now, this may take some time to get back up here, maybe a few weeks to, let's see what the weekly look like.
It's gonna take forever.
Ever. So always just wait for price to get in your zone. That is the key. Wait for price to get in your zone. And then once you start and you're trading the trend, prices in your zone, you can then start stacking. And I say that, so for instance, right here, price came here, right? Let me find a better zone. No, I can use this one. So price came here and then started breaking structure, right? So price broke structure there, pulled back to the 618. This is a Todd order block right here. So let me go down to the daily and you'll see an order block. And it's still a Todd order block. So, okay, so let me just say this. So once price, someone asked me about entries and how do you know when to wait for it to pull back to the 78 or the 618 or the 88, whichever one it's going to pull back to. If price was going to go to the 78 or the 618, price would have never broken back above this zone. So once price pushed, it pulled back, it would have pulled back here and kept going down, right? But once price started breaking structure to the top side, you see my closed candles, right? Closed candles, and price pulled back into that zone, which is a level of support and resistance. So now right here, it was resistance, it broke out and then became support. So now for me, it tapped into the 618. The 618, 78, 88 is I prefer to come back to the 78 or 88, but these are the optimal trading entries for me. And then once price broke through, then I'm like, okay, so price is not going to the 78 or the 88. Price is ready to move back up to these highs. So this is where you could have gotten in. Once you got the breakthrough, the candle, you could have, this one broke through, this one closed, this candle right here closed. So you could have used this order block. If you missed that one, you could have used this order block.
I have a quick question.
Yes.
So, after it does break out and it's going up, it does do like a slight pullback. Like I see it wicks down close to the
All
6-1.
the time. Mm-hmm.
How do you keep yourself from getting stopped out in that case? Do you just trail it or?
Put it below your swing low.
Okay.
You just put it below. Once you put your stop loss below the swing low, and then and that's why I was gonna say, once you get let's just put that as the zone, right? So this would be your next zone. If you want to put it to these here, you can. So once you get in at the swing low and you're not getting in the middle, you can start stacking, right? So this trade right here should always be in profit. This one trade should always be in profit. All the other trades, you want to, let me move this so I can show you. Let me move this so I can show you. So you look for, once it starts stacking, you start looking for these minor levels of support and resistance, right? So price here, and then it broke out and pulled back. So you can get in a trade. You can get in your trade here. Like you have an order block that broke. So you can get in another entry. So you have an entry here. And I'm gonna make them small here. Now I'm gonna tell y'all something that I don't want y'all to, So so once I got my entry here with my stop loss, I'm probably not going to put a stop loss on these right here. But you didn't hear that from me. Okay. So then you have an entry here. If you want to be on the safe side, let me teach y'all the right way. Let me teach the right way. Hold on. Want to be on the safe side, you take your entry here and you put your target below here. Below this zone, the initial zone right here. Right? And then you take that's a stack. Okay. And then as it's going up, you look for your next level of support and resistance. Hold on. Take this out. Okay. So your next level of support and resistance, you just look for the high. You look for the break of that high. Price pulled back, gave an order block. So you want to put your next. You can do your order block here. You can bring your order block to the zone, however you prefer to do it. And that's 33 pips. Just put it below the zone here. You can put it below your zone. And then your target is always going to be the same target, right? Okay. So your next level of support resistance, and see, I don't see anything like, there's a little one here, but because you're waiting for, now this is the key here. If you set this limit right here, right? And price does not come back to that limit, like if you set it here, it would tap you in, right? But if I'm setting it at my level of support and resistance, because right here is not the level of support and resistance, not at this, not because this hasn't played out yet, right? So right here is not your level of support resistance. Right here is your level of support and resistance. So if you're trading your level of support and resistance and price does not come tap you in, don't get in the next trade, because price is likely going to come back. As you can see, price pushed up, came back to your level of support resistance, and then pushed up to the next zone. So this would have been your trade. I wouldn't have gotten into this one because I know that price is going to come back to this level of support resistance. I'm trying to match it up. There you go. Now that would have been a sniper entry. It would have, you would have definitely had to account for spread, because this probably would have missed you. Or if you had just putting it up at the body, that would have gotten you in. Okay, so now the next level. So I would have waited for here, and then, so by the time this happened, all this happened, you had 319 pips, you had 433 pips, and then you had 517 pips. So that's how you stack trading the middle. Now, I don't want y'all to do that yet, but I do want you to, but I want you to know how to do it if you're going to do it. Look for your level of support resistance and trade from there within the middle, and make sure your TP is set to your zone, to your next zone. Again, you could have put it here, because that, as you can see, that's the level of resistance right here. So it would have been, still would have been some great pips. So either way, you could have done that. That would have been 225, 337, and 417. Any questions?
No, ma'am.
Okay.
Thank you.
You're welcome. If y'all have any questions, like any questions, y'all are welcome to ask me. You can ask in the chat.
Are you gonna post the video?
Thank you.
You're welcome.
Kim,
Somebody has something.
it's your bad. Are you gonna post the video?
Yes.
Okay.
I'll see if Ty posted. I have to record the weekly analysis, so so yeah. I'll be sending Ty both. If I don't see that he posted by tomorrow morning, I will post the video. I'll post the Zoom in the chat.
Okay, thank you.
Okay, dope.
See, thanks. This
Thank
was really
you.
good.
You're
Thank-
welcome.
Thank you, Kim. See you tomorrow.
You're welcome.
And
Thank you, thank you.
You're welcome. You're welcome.
Thank you.
See y'all.